All right, so you're here on the deep dive, which means you like getting into the nitty-gritty. Today, we're going deep on Solana.
Definitely a hot topic.
Oh yeah, lots of buzz, some really impressive price action. But we're here to figure out if there's actually substance behind all of that.
That's right. Cut through the hype.
We're digging into a March 2025 research report. It's called Cryptocurrency Research Report. Sounds pretty official, right?
Institutional grade analysis.
Exactly. And our goal, simple. We want to see if Solana is actually a smart investment based on its tech, where it sits in the market, the whole picture, and we want to lay out all the things you should really think about before you jump in, or maybe even if you're already in the Solana game.
Risk and reward. Got to look at both sides.
Absolutely. So to give you an idea of the scale we're talking about here, this report put Solana's market cap somewhere between $64 and $68 billion.
That's as of mid-March 2025.
Yep. And the fully diluted valuation, even higher, something like 75 to 80 billion. So not messing around here. This is a major player.
Big leagues.
Definitely. And just from the initial overview, some things really jump out. It can process a ton of transactions super fast, the fees are crazy low, and the ecosystem is just exploding with new applications. They're really positioning themselves as a legitimate contender to some of those older, more established blockchains.
It's a bold claim.
It is. So let's see what they've got. I guess this is our one Sarin intro and investment thesis. Time to move on to tease out project overview and value proposition, I think.
Sounds good.
So what's the big picture? What's Solana actually trying to do here?
Their mission, at the most fundamental level, is really ambitious. The report calls it being the most censorship-resistant network in the world. Think about what that could mean. Anyone, anywhere, can send transactions without worrying about being blocked.
No gatekeepers.
Exactly. Powerful concept.
Really is. Okay, so if that's the vision, what problem is Solana trying to solve to get there?
The report hones in on scalability. It's all about being able to process thousands of transactions every second and doing it for next to nothing in fees.
Yeah, that's a big difference compared to some of those early blockchains that get bogged down so easily.
Night and day. Think of it like this. They're building a superhighway, multiple lanes wide open, while others are stuck on these little country roads, traffic jams everywhere.
Love that analogy. Makes it crystal clear. So how are they pulling this off? What's the secret sauce?
Well, it's not just one thing. They've got this unique blend of technologies, starting with their consensus mechanism. It's a hybrid of proof of history, or POH, and the more familiar proof of stake, POS.
Okay, so they're combining approaches.
Right. But that's not all. There's also Tower BFT, Turbine, Sea Level. These are all innovations they've built into the system to really crank up the speed and make it run smoothly. Each one has a specific job to do.
I like how this report gives a little bit of the backstory, too. Did you know this whole thing started back in 2017 with this guy, Anatoly Yakovenko? He was an engineer at Qualcomm.
Yeah, serious tech background.
Then in 2020, the Solana Foundation officially launches the whole thing in Geneva. Oh, and fun fact, the name Solana actually comes from Solana Beach, California. Apparently, that's where the early team was hanging out.
Little West Coast vibe.
Right. So who are they going after with all this? Who's the target audience?
They're casting a pretty wide net, going after both individual users who want to get into these decentralized applications.
dApps, for those in the know.
Exactly. And also bigger companies that are starting to explore how they can use blockchain technology. Their big ultimate goal to make decentralized finance, DeFi, accessible to literally everyone, everywhere.
Global ambition.
Definitely.
So thinking about this from an investment angle, what does the report say about the potential upside, the risks, all of that?
Well, they definitely highlight those tech advantages, the speed and low costs, as big drivers for attracting both users and developers, which obviously helps the whole project grow. There's also increasing interest from institutions, which is a good sign. We're seeing Solana futures being listed, for instance. Plus, the Solana ecosystem keeps expanding, more applications, more users. That's all positive.
But, like you said earlier, gotta look at both sides.
For sure. The report doesn't shy away from the risks either. They talk about the network outages they've had in the past, which raises questions about reliability, of course. Then there's the whole regulatory landscape, always shifting, never quite sure what's going to happen next, especially with crypto.
Yeah, that's a big one.
And of course, you can't forget the competition, lots of other blockchain projects out there vying for attention. Plus, just the inherent volatility of the crypto market in general.
Always a roller coaster. Okay, so that paints a pretty good overall picture, I think. Ready to get a little more technical.
Absolutely. Let's dive into three cells of technology, protocol, and tokenomics.
All right, so the report labels Solana a layer 1 blockchain protocol. So basically, it's like the foundation, the base layer,
Yeah.
and then you build all sorts of applications on top of that, right?
Exactly. It's the infrastructure, the backbone.
And like we talked about, it's that unique combo of proof of history and proof of stake that really makes it tick.
The engine, so to speak.
Oh, and there's this interesting detail. I know Solana is different from Ethereum, but there are projects like Neon EVM trying to build bridges between the two. So you could potentially run Ethereum applications on Solana.
Compatibility is a big factor.
For sure. Okay, so let's talk speed. This is where things get really interesting. The report says Solana could theoretically handle over 700,000 transactions every second.
The theoretical maximum.
Right. But in reality, looking at March 2025 data, they're seeing something more like 4,500 to 65,000 TPS. Still way faster than a lot of other blockchains, even at the low end. And the cool part is that Solana is designed to scale horizontally. So as more people use it, it can handle more transactions without slowing down too much.
In theory.
Right, in theory. Okay, let's break down some of those core tech innovations that the report goes into. First, we've got proof of history. They call it a decentralized clock. But what does that actually mean for making things faster?
So think about how most blockchains work. All these computers, or nodes, have to constantly talk to each other to agree on the order of transactions. Proof of history basically adds a timestamp right into the transaction record as it happens. It's like a verifiable history of what happened when. This means that those nodes don't have to spend so much time and effort figuring out the order because it's already there, cryptographically secured.
So it's like everyone has a perfectly synchronized watch. No more arguing about who's right.
Precisely.
Next up, the report talks about Tower BFT. It's something called an optimized PBFT algorithm tailored for POH. Okay, I'm already lost. What does that actually mean for the network's efficiency?
All right, so PBFT stands for Practical Byzantine Fault Tolerance. It's basically a way to keep a system running smoothly even if some of the participants are acting up, whether they're buggy or malicious. Tower BFT is specifically designed to work seamlessly with those timestamps created by proof of history. By taking advantage of that pre-established order, Tower BFT can speed up the whole process of getting transactions confirmed on the blockchain.
So less waiting around.
Exactly. Lower latency.
Got it. Then there's Turbine, which they describe as a BitTorrent-inspired block propagation protocol. Now, I know little about BitTorrent, but how does that apply to a blockchain?
Think about sharing a huge file online with tons of people. If you try to send the whole thing to everyone at once, it'll clog up the network. BitTorrent breaks that file into smaller pieces, and then people can download those pieces from multiple sources at the same time. It's much more efficient.
Okay, spreading out the load.
Right. Turbine does something similar with blockchain data. It splits the transaction data into smaller packets and sends them out to lots of different nodes. This way, the information can spread across the network super fast, which is crucial when you're dealing with tons of transactions happening all the time.
Makes sense. Last one, we've got C-level. They call this the parallel smart contract runtime. Sounds like this is how they can run so many applications at once. How does that actually work?
So in a lot of older blockchain designs, smart contracts, the code that runs those DSAPs, they have to be executed one after another. This creates bottlenecks when things get busy.
Line at the checkout.
Pretty much. C-level changes that. It lets thousands of smart contracts run at the same time, as long as they're not all trying to access the same data. This massively boosts the network's ability to handle all these complex applications with tons of users interacting with them.
So no more waiting in line, everyone gets served at once. Pretty cool.
It's a game changer.
The report also spends a good amount of time talking about Solana's developer community. Apparently, they had over 2,500 active developers per month in 2023, second only to Ethereum.
A good metric.
Yeah, and in 2024, they were actually the top platform for attracting new developers. Plus, they're keeping a lot of those developers engaged, which is great.
More than half are sticking around.
Exactly. So that seems like a really healthy sign. Lots of people building on Solana, which obviously helps it grow and evolve.
The lifeblood of any platform.
All right, let's talk about SOL. That's the native cryptocurrency here. The report says as of March 2025, there are about 510 million tokens circulating and a total supply of around 596 million. Interestingly, unlike some other cryptos like Bitcoin, Solana doesn't have a fixed maximum supply. What's the thinking behind that?
It's a different approach. With Bitcoin, you've got that hard cap of 21 million coins. Solana's supply can theoretically keep growing through inflation. However, there's a built-in mechanism to gradually reduce that inflation rate over time.
So it's not just going to keep inflating forever.
No. They started with an 8% annual inflation rate, and it's designed to drop by 15% every year until it settles at 1.5%.
So it's steadily going down.
Yep. In March 2025, the inflation rate was somewhere between 4.6% and 4.9%. There was actually a proposal recently to make the inflation rate more dynamic, changing based on what's happening on the network, but that didn't get enough votes to pass.
Interesting. So what can you actually do with SOL? What's it used for within the ecosystem?
Well, first off, you need SOL to pay transaction fees on the network. That's how you incentivize the validators who are processing all those transactions and keeping everything secure. Then there's staking. You can lock up your SOL, delegate it to a validator, and earn rewards for helping secure the network.
Passive income.
Exactly. And SOL also plays a role in governance, although how much direct control token holders have varies depending on the specific project built on Solana.
So multiple uses. The report mentions that staking yields could be over 7% or 8% per year. Not bad.
Solid returns. And it also says the more SOL validator has staked with them, the more voting power they have on the network. So it's all about how much you've got skin in the game.
Right. The more you stake, the more influence you have. It's a way to align incentives, basically. Those with the most to lose have the most say in how things are run.
Makes sense. What about the initial distribution of SOL? How did that go down back in 2020?
So they allocated a chunk to those early investors who took a chance on the project. That was 16.23%. Then another 12.92% went to people who participated in the founding sale. The core team members got 12.79%. The Solana Foundation, they're the ones responsible for guiding the whole ecosystem. They get 10.46%.
Yeah.
And the biggest slice, 38.89%, was reserved for the community.
So, a good mix.
Yeah, and it's worth noting that the Solana Foundation and Solana Labs, they still hold quite a bit of SOL. They use it strategically to help the ecosystem grow. Things like grants for developers and delegating tokens to promising projects. The community allocation is all about driving adoption and decentralization over the long term. Things like airdrops and reward programs. Cool. So I think we've covered the tech side pretty well. Now let's get into Forge on market performance and on-chain metrics.
Time for some numbers.
Exactly. We talked about the market cap earlier, that $64 to $68 billion range, fully diluted valuation a bit higher. And the report also mentions a 24-hour trading volume of $2.5 to $3.4 billion. What does that tell you?
That's a lot of activity. Very liquid market. People are actively buying and selling SOL, which means it's easy to get in and out without causing huge price swings.
So a healthy market. What about the price itself? How has it been doing?
Well, as of March 18th, 2025, it was trading between $125 and $134. The week before, it was around $125, and a month before that, around $168.
So some ups and downs.
Definitely. The report points out that SOL hit a high of $293 to $296 back in January 2025, and a year earlier, it was trading around $191.
Yeah, that's pretty volatile.
Welcome to crypto.
Right. So let's look beyond the price and into what's happening on the network itself. The report talks about daily active addresses and daily transactions.
Yeah.
Over 4 million daily active addresses and something like 86 million daily transactions in March 2025. Those are huge numbers. What do they tell you?
Those numbers show a lot of engagement. Over 4 million daily active addresses mean a lot of people are using the Solana blockchain every single day. And 86 million transactions. That shows the network can handle a serious volume of activity.
Living up to the hype, then.
Seems so. The report also gives the live TPS, transactions per second, from March 19th, 2025. It was around 4,375, lower than the theoretical maximum, but still very impressive compared to a lot of other blockchains out there. And here's the kicker. The average transaction fee was only about $0.000025.
Basically free.
Pretty much.
All right, let's talk about decentralization. That's always a big topic in crypto. The report calls Solana's consensus mechanism delegated proof of stake, or DPoS. It says there are over 4,500 nodes involved, around 1,414 of those being validators. They're spread out across 37 countries, which sounds pretty decentralized, but are there any red flags?
Well, while it's good to see nodes in 37 countries, most of them are concentrated in America and Europe, and they're run by 135 different service providers.
Yeah.
The report also points out that the two biggest validators each control about 3.2% of the total staked SOL.
So some concentration there.
Right. And then there's the Nakamoto coefficient. That's a way to measure decentralization. For Solana, it's often cited as 19.
Which is?
It means theoretically you'd need at least 19 validators to collude to disrupt the network. But the report makes a good point. This might be underestimating things because someone could be running multiple validators secretly.
So it might not be as decentralized as it seems.
Exactly. Something to keep an eye on.
Okay. Let's talk about DeFi. decentralized finance on Solana. The report says the total value locked, TVL, was around $6.5 to $6.8 billion in March 2025. What does that tell you about the DeFi scene on Solana?
That's a lot of money flowing through DeFi apps on Solana. Shows it's a pretty mature and active ecosystem. People are using these decentralized exchanges, lending platforms, yield farming, all that stuff.
So serious DeFi hub.
Yeah.
Yeah.
And they're making waves in the DX space too. In early 2025, Solana DX were doing 50% of all DX volume, even more than all the DXs running on the Ethereum virtual machine combined in January 2025.
So they're really challenging Ethereum's dominance.
For sure. Especially when it comes to retail trading, Solana is a big player.
Interesting. The report also throws out some other numbers. Stablecoin market cap on Solana is over $12 billion. Over 340 million NFTs have been minted on the platform. And in Q4 2023, they handled 40.7 million daily user transactions. Sounds like people are using this thing for all sorts of stuff.
Very active and diverse ecosystem. Definitely not just hype.
And it's not just the on-chain stuff. The report also looks at social media and Google Trends. They found a big, active community around Solana online and increasing interest over the past 5 years. Even more interesting, recent data shows Solana is more popular in searches than Ethereum and even those meme coins.
Going mainstream.
Seems like it. Okay, let's move on to 5 ecosystem, partnerships and competitive landscape.
Lots to cover there.
So the report really dives into the whole dApp ecosystem on Solana. In DeFi, they highlight platforms like Jupiter, Radium, Camino Finance, Marinade Finance, Solend, Orca, Drift, all doing different things in the DeFi space. On the NFT side, you've got Magic Eden and Solana, big marketplaces. And then there's this whole SocialFi thing emerging, which is kind of cool. Grape Network and Buddy Link are mentioned, doing interesting stuff with social media and decentralization. And then in payments, Solana Pay is starting to make a name for itself, even getting integrated with Shopify for USDC payments.
Lots of innovation happening.
Yeah, it's not just about the individual dApps either. It's also about how easy it is to use them right. The report mentions a bunch of wallets that support Solana. Coinbase Wallet, Kraken Wallet, Phantom, Solflare, Orca Wallet, Solend Wallet, Binance Wallet, Camino Wallet. And major exchanges like Coinbase and Kraken are also offering trading and staking for SOL.
Makes it easy to get started.
Exactly. Plus, there are some really interesting integrations happening too, like GameSite, which lets game developers track what's happening in their games on-chain. And Coinbase Prime is letting institutional investors access liquid staking through Marinade Finance. So they're catering to all these different needs within the ecosystem.
Building out the infrastructure.
Right. And then there are the partnerships. These are pretty impressive. Google Cloud is running a Solana validator and talking about integrating with BigQuery. ASICS, the shoe company, is using Solana for loyalty programs. Shopify is letting people pay with USDC through Solana Pay. And even some big financial players like Franklin Templeton are getting involved, launching a DeFi fund on Solana.
Right.
That's a pretty big vote of confidence.
Traditional finance taking notice.
Exactly. And there are others too. Taurus is working with them on custody solutions and tokenizing real-world assets. Van Eck is partnering with Kiln to offer institutional staking services. So a lot of serious players are getting involved with Solana. But let's be real, this space is insanely competitive. The report names some of Solana's direct rivals: Ethereum, BNB Chain, Cardano, Avalanche, Polkadot, Aptos, Sui.
A crowded field.
And it's not just those layer 1 blockchains either. There are all the other layer 1s out there, and then Ethereum's layer 2 solutions that are also trying to scale things up. So where does Solana actually stand in all of this?
Well, if you look at market cap, Bitcoin and Ethereum are still the kings. Solana usually sits somewhere in the top 5 or 6. In terms of DeFi, Ethereum has the most total value locked, but Solana is catching up, especially in the DX space. Remember, they were doing 50% of DX volume earlier this year.
Dominating the DX.
Yep. So while Ethereum has that first mover advantage and the network effect, Solana is carving out its own niche, especially for high-speed trading and attracting those everyday users.
Got it. The report does a SWOT analysis, looking at Solana's strengths, weaknesses, opportunities, and threats. The strengths, high TPS and low fees, those are obvious. What about the weaknesses, opportunities, and threats?
Their biggest weakness is definitely those network outages. That raises questions about reliability.
Makes people hesitant.
Yeah, but the opportunities are huge. They're really well positioned to attract a ton of everyday users, especially with those performance advantages and low costs. And they're a good fit for new applications in areas like DePIN, that's decentralized physical infrastructure networks, And GameFi, blockchain gaming.
Lots of potential. What about the threats?
Well, competition is fierce, and new layer ones are popping up all the time. Plus, blockchain tech is evolving rapidly. Things like modular blockchains are emerging, which offer a different way to scale things, so they've got to stay ahead of the curve. Okay, now let's wrap things up with 6-team governance, roadmap, risks, and conclusion. The report gives a rundown of the Solana Labs team. Very tech-heavy group. The founder, Anatoly Yakovenko, he's got a strong background in distributed systems, worked at Qualcomm, Dropbox, those kinds of places. Raj Gokal, the co-founder and COO, he comes from a finance and startup world. The other co-founders are all engineers, too.
So, a team that knows how to build things.
Definitely. And the report mentions some advisors, like Colin Beaumont, who is at Nortel Networks. It also clarifies that Solana Financial Group is separate, not part of the core team.
Good to know.
Overall, this team has serious technical chops, and they've proven they can move fast and innovate.
That's important in this space.
Absolutely. But as the report reminds us, those past outages are still a concern.
Got to address those.
For sure. Now, let's talk about how Solana is governed, how decisions get made about the future of the protocol.
Always an interesting question with these decentralized projects.
So, the main way they handle protocol upgrades and big changes is through on-chain governance. Validators, the ones staking SOL, they get to vote on proposals. The more SOL they've staked, the more voting power they have. The report actually mentions a recent vote on something called SIMD 228, which had a really high turnout. 74% of all staked SOL participated.
So people are engaged.
Yeah. Then there's the off-chain governance stuff, things like ecosystem development and managing the Solana Foundation's treasury. That's mostly handled by the foundation itself. The report says they had a treasury of about $134 million in late 2024, and they release these transparency reports every month.
Keeps things open.
Yep. There are also platforms and tools popping up like Squads and Integral that help individual projects on Solana manage their treasuries.
Cool. So what are some of the big things Solana has accomplished since it launched, and what should we be watching for in 2025, according to the report?
Well, since that mainnet beta launch in March 2020, they've seen massive growth in DeFi and NFTs. Solana Pay is gaining traction, and they even launched that Solana Saga phone, which was pretty cool. And those on-chain votes, like SIMD 228, show they're actively evolving the network. Looking ahead to 2025, there are some potential game changers. They're expecting to launch Slayer Infinis VM, which could boost transaction speeds even more. There's a proposal, SIMD 215, to support billions of accounts on the network. Anza, one of the core developer teams, is working on efficiency improvements and potentially doubling the block space. And then there's the possibility of a spot Solana ETF getting approved in the US.
That would be huge.
Oh, yeah. Plus, there's the Fire Dancer client being developed, which is supposed to make the network more resilient. And they're even talking about a new Solana phone, maybe called the Solana Seeker, coming out sometime in 2025. But of course, there are risks, too.
Always risks.
Hitting those ambitious tech goals is never easy, and there could be regulatory delays, especially for things like ETFs.
Fingers crossed. Okay, let's talk about security. That's a big one, especially in crypto. What does the report say about Solana's track record and what they're doing to keep things safe?
They definitely acknowledge that there have been some security incidents in the past. That big exploit in August 2022 that hit thousands of wallets. The Wormhole Bridge exploit, which cost a lot of money. That Sol Farm, now Tulip, reentrancy attack a while back. And then more recently, in January 2025, they found some malicious NPM packages that could have been a problem for developers.
So not a perfect record.
No. But they are taking security seriously.
Yeah.
The report mentions all these audits being done by reputable firms like Cfrin, Hacken, Quill Audits, and OSEC. They're looking at the core protocol and all sorts of DeFi projects built on Solana. Some projects, like Squads, are even using formal verification to make sure their code is rock solid.
Going the extra mile.
Yeah. And there are platforms like Cyberscope that give you insights into the security of different projects. Plus, they're constantly improving security through network upgrades and bug bounty programs, rewarding people for finding vulnerabilities. But like with any complex software, you always have to be vigilant and proactive.
Can't let your guard down.
Exactly.
Okay, last big topic, regulation. What's the situation for Solana and how could it impact their future?
Well, the legal status of SOL, like a lot of cryptocurrencies, isn't quite clear-cut. It depends on where you are. In the US, they haven't approved a spot Solana ETF yet, which suggests some hesitation from regulators. But they have approved Bitcoin and Ethereum futures and spot ETFs, so maybe that's a sign of things to come. In Europe, you can invest in Solana through ETNs, and Brazil has actually approved spot Solana ETFs.
So it's a mixed bag.
Yeah, different approaches in different places. The report also points out that a lot of people in the Asia-Pacific region are trading Bitcoin, and the Solana ecosystem is growing rapidly there too.
Interesting. So what are the biggest regulatory risks for Solana?
The report says the worst-case scenario would be if SOL gets classified as a security in major markets. That would mean way stricter regulations. And then there's just the general uncertainty around crypto regulation, which could go in any direction.
Always a wild card.
Absolutely. The report actually has this whole risk assessment matrix, breaks things down by category, and looks at the probability of each risk and how big of an impact it could have.
Give us the highlights.
All right, so on the technical side, network outages and congestion are a medium probability but high impact risk. Same with smart contract exploits. Roadmap delays are medium probability, medium impact. Market risks. Price volatility, obviously high probability, high impact. Competition, medium probability, medium impact. And then negative sentiment or a downturn in the whole crypto market, that's medium probability but high impact.
How to be prepared for those.
Definitely. Regulatory risks. SOL getting labeled as a security is low probability, but if it happens, the impact would be huge. And then just general regulatory scrutiny increasing, that's medium probability and medium impact. Lastly, operational risks, things like centralization concerns, and the security of the Solana Foundation's treasury. Those are both low probability, medium impact.
So, pretty thorough assessments.
Yeah, they covered a lot of ground.
Okay, before we wrap up, let's talk about valuation and the report's overall conclusion.
Figuring out what a cryptocurrency is actually worth is tricky.
Totally different from traditional markets.
Right. The report looks at the NVT ratio for Solana, network value to transactions, and it suggests that the network is getting more useful, which could mean SOL is undervalued. Plus, all that activity on the network backs up the idea that it has real value.
So potentially a good buy.
Maybe. But those traditional valuation methods, like discounted cash flow, they don't really work for crypto. The report mentions that analysts have a wide range of price targets for SOL by the end of 2025, from a bearish $220 to super bullish predictions of over $1,000.
So take your pick.
Pretty much. But the report's official recommendation is a hold on Solana right now. They like the tech, the growing ecosystem, the institutional interest, but those outages, centralization worries, and the regulatory uncertainty make them cautious. Their advice is to wait and see how things shake out, see if the network stabilizes and what happens with regulations before going all in.
Makes sense. So that wraps up our deep dive on Solana.
Tons of information to digest.
We covered the tech, the market, the team, the risks, the whole 9 yards. It's clear Solana has a lot going for it, but it's not without its challenges.
Definitely a lot to consider.
And here's our final food for thought. This space is moving so fast, always innovating. What do you think, what are the big advancements or maybe unexpected obstacles that will really shape Solana's future? We've talked about a lot, but what are those wild cards, those things that could really make or break it in the long run?
It's a question that forces us to think beyond the current data and look at the bigger picture.
Exactly. The source for all of this, by the way, was that cryptocurrency research report. It's full of great info, so if you want to dig deeper into any of the stuff we talked about, I highly recommend checking it out.
Lots of references to explore.
All right, thanks for joining us on the deep dive.
See you next time.
Catch you later.